Hey everybody, this is Marsilio and I am back via video. I'm going to try and put these out about once a week, keep it very short to the point, focus on strategy and setups, because I know there's a lot of content out there and I want every minute to count. So, basic market take. Uh, Easy money on the rally has been made. That does not necessarily mean the top is in. In fact, I prefer higher in the second quarter, but S&P is up more than 20% from the last key low, and Bitcoin's up more than 100% from the lows that were in October, um, or actually the low in September that was near 25,000. Now it's above 50,000, so that's a 100% rally. And so we've had massive moves. A lot of AI names have melted up as called in December, NVDA in particular. So what does that mean in terms of strategy? Well, when I'm confident that rally has more to go, I want to be long and holding. But if I think the market may be near an inflection point, then strategy changes to locking gains or taking some hedging trades or taking some other types of trades to profit on any market weakness. So exactly what these are, depends on you as a trader, type of things you trade and time frames and all of that. But this is, I'm going to give you a few key levels to watch, and then I'll go to a few timing points, and then a couple setups that I'm kind of my favorite setups going into the coming week, and that'll do it. So here's Bitcoin. It's right on that yearly R1. I'd still like to see this push through actually. So the yearly R1 is the red arrow 52 600-ish. It has been at highs, 3-4 days here. But two of them are weekends, so weekend or holidays, so I'm not really counting those too much. And I would like to see it push through, but it is still worth watching. Now, I'm a trend trader. I'm not looking to short Bitcoin, but and it's above all the moving averages, which I'm just using simple movers here: 10, 20, 50, 100, 200, all up. So this gets the benefit of the doubt, and a pullback to the 10 MA and a rally high could easily play out. Now, how much you want to try to play for, under a 2,000 Bitcoin, $2,000 Bitcoin move? That's not my style anymore, at least on this vehicle. But as long as the 10 MA is holding and the slope is like that, the trend is up. So I think it's going to get through, or has a chance to get through, at least this week and early next week. If it doesn't, then I might think differently. Otherwise, I think a lot of stocks may be coming to a little bit more vulnerable point. Here's 10-year yield, which moved the market quite a lot last year. It doesn't mean the same thing will happen this year, but it is back at highs. And in fact, even though this bar looks a little toppy, what the futures are doing right now, probably going to open higher. So this is the end. So this is the futures for the 10-year yield. So that's the futures are open. The bond market closed, obviously. So that's going to open. If bond futures are down, that means the yield's going to be opening up. So I think that may pressure markets, especially in the next few weeks. That so far markets have ignored the rise back in yields, but I don't think that'll be the case in the next few weeks. And also, I want to point out VIX. I really think VIX does a good job alerting. Most of the time, VIX is quite. The arrow showed 2 points back in early November. Really, so much room left in that rally. VIX was below all pivots, below all moving averages as of that November 2nd. So much to be made on the rally since then. And then the first time that status changed was December. It popped above moving averages a little bit, but still below all pivots, back below all moving averages. popped above, but then below. We're starting to see that it is not as worry-free as it was. We've gotten a pop. It's above 3 moving averages, and they're sloping upward now, and still above the February pivot. So if VIX collapses, then okay, bulls in charge, no problem. But VIX anywhere above 14 means we could see some trouble. Now, of course, NVIDIA has been the massive market leader. When everybody like to know my prediction for NVIDIA, it is all the way up to floor trader yearly R2, which is Fibonacci R3. That's why you see that label. So, but it could blast through on earnings, or it could drop. My best take on this is if it rallies, we're probably going to see profit taking. If it drops on earnings, probably going to see it bought. But in terms of where earnings come in relative to expectations, really no idea. But the percent mood on this has just been insane. I mean, this was below 500 just at the start of the year, and now it's 725. So massive, massive move. Now, in terms of some other types of data, my timing work, this is, I'm going to try and do it with as little astrolingo as possible. But basically, this is seasonality from fourth quarter into early first quarter, 1980 current, bull markets only. And this whole period delivered. Huge rally in October, November, December, January. And now we're into February. And the drop off from here to here is just begun today. So this is just data. And this is actually a cycle that will show up seasonally. Now, all the data changes, whether I'm using planet-connected timing or other timing. It depends on what starting point you look at. Like average whatever in S&P is going to be different from 1950 to 1980, 1980 to 2000. Like, so a selection of time period will change everything. But so this does change. Depending on the look back period, like I can adjust it to 2000, but still there's often a drop off of momentum around here, around now. So that's one point. The midweek pullback pattern has been in play for SP for quite some time and still seems to be playing out. This is not something that necessarily repeats every week, and I think the longer it goes on some of these edges, the more people get into it and start to expect it, and then we'll get a curveball. But I do think that midweek weakness is likely Tuesday, Wednesday, Tuesday or maybe early Wednesday of this week, and then markets will be rallying on NVIDIA earnings. There'll probably be some buying anticipation of that. The other timing note that I want to point out is that some of the crypto traders may have an idea about Moon and Virgo, especially full moons, dropping. And for a long, long time, this was one of the best edges, was shorting cryptos and with Moon and Virgo because it was just dropping the most. But these do change over time, and it's just not the case currently, right? So this is 2020 all the way to 2023 in bear markets, and cryptos were getting hammered. But moving on to the more recent phase of the rally, when stocks bottomed and selecting for bull markets, is doing fine. So everything depends on market environment, and the Astro data will reflect that. I find a huge difference between bear market data and bull market data. Bear markets are violent. They have very sharp moves down and also very fast moves up. So the Astro edges and Astro data tend to be quite different than bull markets, which are generally calmer and more stable and include some long periods of sideways consolidation and slower grinds up. So, okay, what people really want to know, best setups. Well, Bitcoin, I'm happy to keep watching. NVIDIA is still, I mean, excuse me, Ethereum is still powering up, which is helpful. And some of the alts, I think, also have a good shot at continuing to rally this week and next week, and especially if Bitcoin clears. And I wish I had, I was mentioned something on Twitter about shorting oil, and I was on the verge of doing XLE, and then there was a huge bounce right, right from a level that I said needed to break to confirm. So thankfully, that was not triggered. A little bit more neutral on the oil and oil names right now due to that big rally. But what I wish I spotted before in terms of a setup is legacy tech, that it's clearly getting out innovated by AI and new startups. Adobe took an absolute hammering just based on news of OpenAI, a video creation tool. So I don't like to chase. RSI is already the lowest in months, but I'm thinking if Adobe is taking a dive like that, others that may follow suit. Oracle testing daily 200 moving average. Apple's below its 200 moving average right now. Why should Oracle be above? I mean, I don't want to short Apple or Google, even though there's kind of interesting technical weakness on both of those names. But anything that's kind of, I mean, Oracle, I don't think that'll hold. And then Cisco already looks terrible. This is actually a downtrend. There are a few other good setups that I'm liking that are some counter trend trades, but I'll save those for another day. Anyway, that's going to be it for now. The other thing I'd like to mention is I'm trying to finalize or at least determine a content delivery strategy. And I know people have mentioned Discord. I'm looking at Slack. I'm looking at Twitter subscription. There are different ways of doing this. I know YouTube videos can be public or private. I feel strongly that video explanation of the kind of content I produce is very necessary. But if you have any opinions on what you think would be the best and easiest for delivery of content, I want to make it as easy as possible for people to understand. And I know that the random nature of my posts on Twitter are not conducive for that. So I want something easy to comprehend, easy to access, organized. And I'm trying to work that out. So if you have any thoughts on what that could be, please let me know, reach out or comment. Thank you very much. Hope that's helpful. Good luck.